Hey, everybody. Welcome to a very special webinar I'm doing tonight. Glad to have you all here with me. It's Wednesday, November 5th, right at 7 o'clock. And again, as I let everybody come into the room, I want to talk about something called gold's quiet revolution. Why the 2025 breakout isn't over yet, in my humble opinion. Why I believe that we still got a long way to go. And there's a few things there that I want to cover. So I do have quite a bit I want to cover with you tonight, but this is really the topic, although it's, as I'm going through this, I'm realizing that it's not just about gold. There's so many other things I want to cover. So this is just the beginning piece. But, if you're like me, you can't pick up a newspaper or you can't find some sort of a financial website, or you can't even watch TV for an extended amount of time before you're hearing something about gold. For instance, what I'm seeing right now on the screen, that's a big part as well. I mean, you've got, Woodsea's gold price rising 76% to $6,600 an ounce. You got the Economic Times. They're projecting $6,500 by 2027 and $10,000 an ounce by 2030. You got Bloomberg saying $4,600 next year. Morgan Stanley, $4,500 by mid-2026. That's what, 8 months away. And, just the list just goes on and on and on. And so, I want to call your attention to the fact that I don't think these people are entirely wrong. And I'm going to explain why I think, typically I like to go against most of these newspapers, but they're talking in the long term. And so in the long term, I cannot disagree with them. And there's a big reason why. But today, I'm going to show you three things. I want to talk about where I see hard and digital assets, not just gold, but things like gold, silver, digital assets like Bitcoin and Ethereum, where they're going to be going here into and over the next year. I also want to do something I haven't done before. I want to talk about very quickly how I buy physical for the long-term appreciation. And I'm talking about the physical, not just the physical hard, but the physical digital. I want to talk about the ways I profit in the short to intermediate. I got a free gift for everybody for just watching me tonight. And I have an offer for a few of you that are watching me tonight. So let's talk about hard and digital assets first. So hard and digital assets, and before I begin, folks, let me just mention this really quick. All right. I'm not your financial advisor. This is not investment advice. Okay. Obviously, you need a broker to trade with, and you must meet certain requirements. And that being said, your decisions are between you, maybe your spouse, maybe your investment advisor or your broker. I'm here to help educate you on exactly what it is that I do. All right. So when it comes to hard and digital assets, I want to show you what I call lifetime charts. What are lifetime charts in gold and silver? Well, I'm a ripe 60 years old, so I thought, let me go see where gold and silver were trading 60 years ago and what's happened since then. And I've got some pretty interesting little, timelines along the way. Best physical stores of gold for long-term investments in 2025, and some of them are not what I've used, because things have changed over time. Bitcoin and Ethereum charts, I got those. I got projections. I got the best crypto exchanges this year. And of course, something I call speed gold, which I think most of you are here to find out about tonight. So let's talk about gold, and let's talk about this lifetime chart I got here. So this is the price of gold during my lifetime. It's actually 120x'd, but it's taken 60 years to do so. Now, when you go back and you think about since 1965, that's, 120x, you might say, well, that's 2x a year, Tom. Not necessarily, because if it was 2x a year compounded, it'd be a lot more than 120. So keep that in mind. This is a 120x from 1965 to very recently. Things that have happened since then. Well, prior to 1971, all right, we were on the gold standard. We exited the gold standard. Bretton Woods, gone. Oil crisis of 73, gold moved above $100 an ounce. Inflation. How many of you remember the late 70s and early 80s when inflation was at 13.5%. And I remember my mother having, long-term bonds, 30-year bonds. And the 30-year bond rate, I don't remember what it is, but it was in the teens. I remember that. So what happened after 1980? We went into a 20-year bear market for gold. 20 years. 880 to 252 was the low point back around the year 2000. So what happened between year 2000 and where we are now? Well, we had a financial crisis in 2008. Gold jumped to $780. The European debt crisis caused gold to jump to $1,900, right? 2020, we saw gold back down to below around $2,000 an ounce. And then here more recently, $4,000 an ounce. And, we've been bouncing back and forth ever since. What about the price of silver? Well, price of silver is 50x during my lifetime, meaning that back in 1965, we hovered in an area of around $1.28 to $1.30 an ounce. Okay, we jumped out after that. And the same things really caused silver to move up like gold, but it didn't have anywhere near the sustained effect. In fact, the gold-silver ratio is very low compared to where it was 10 years ago, this millennium, even back to 1965. So where do I buy my gold? Okay, so I own the physical. I own coins. I own bullion mostly. I'm not a big coin collector in gold, but I have it for the numismatic value. So these are the best physical precious metal sites here for 2025. And, it's not the ones you hear about on TV, because I haven't heard of any of these. Maybe American Hartford, but I haven't heard of Goldco. And I haven't heard of BGASC on television, but I know them because they have really good Trustpilot scores. In fact, these are the top Trustpilot score reviews of any and all gold dealers. So Goldco is goldco.com. American Hartford Gold is americanhartfordgold.com. And BGASC is bgasc.com. They all have pros and cons, all right? They all have free shipping for anything over $199 in terms of purchases. Goldco deals with IRAs mostly, okay? But all of them do call-ins. And in fact, Goldco and American Hartford are call-in only. You cannot buy it online. They have real-time pricing online, but you can't buy it online. You got to lock in your price by giving them a phone call. So that is the precious metals and dealers. All right, who have I used actually? I use Kitco. I didn't have any problem with Kitco. I've used my local place here in Sarasota, Florida. Didn't have any problem with them. But you know what I realized afterwards is that the spread between the buy and sell is a little bit thinner when you look at some of these price matches with American Hartford. BGASC, very competitive prices. Goldco's got a lot of good education, not just on what gold is, but a lot of education on the fundamentals in terms of not only the not just gold itself and the physical, but supply demand. So they all have some good pros and cons out there. So moving forward, let's talk about Bitcoin and Ethereum. I'm not fluffing around at all tonight, folks. I really want to just get you this information as quickly, well, not as quickly as I can, but in an area where I'm not going to be spending too much time just dilly-dallying. So let's talk about Bitcoin and Ethereum. Boy, what a week to start this. We've been planning this this particular night for several weeks now. What I didn't realize is that we were going to get the big drop down like we did earlier this week. So I want to back up for a moment. Gold had a four sigma move recently. I'm going to look at some ETF charts here, but gold had a 4.5 sigma move. What was it, a week or two ago when it dropped really hard? That's a 1 in 200,000 chance of happening in one day. Well, it did it. Okay. And a lot of value investors, myself included, thought that they did. Very possible that a big move like that isn't going to happen, at least for the rest of this year. But there's also some potential value there. I'm going to get back to gold and silver in a moment and where I think the value is for the long-term buyer. But Bitcoin and Ethereum, well, they had their Sigma moment earlier this week when Bitcoin dropped, I want to say, over 7.5% in one day. Ethereum was down 12% in one day. That was just 2 days ago, after doubling in value last year, because that's what they did. Bitcoin and Ethereum, they're under bearish attack. They're down just in the last month, 18% and 30%, respectively, right? Being down 18% sounds like a healthy pullback. Being down 30%, a little bit more. But again, you're dealing with the alphas. These are the alpha, the alpha movers in assets. So the big questions that were coming up, especially yesterday when Monday and yesterday after the big move down, is this the start of crypto winter, or is it a shakeout of weak hands before moving back up to all-time highs once again? So let's look at some charts. But before we look at the charts, I want to mention something because, I do a lot of research and I look back and I do it, make a few phone calls, do some research. And I am of the belief that this was a weak hand shakeout, but it was something that needed to happen. Not just weak hands, but there were liquidations of a lot of companies. A lot of companies went bust with that liquidation day with Bitcoin and Ethereum. And so these were, again, we've said this before. This is not the first time I mentioned this, but using leverage, Bitcoin and Ethereum, the only leverage I want to use is potentially options in Bitcoin or options in Ethereum or options in a Bitcoin ETF or options in an Ethereum ETF, because, the last thing I need is to add margin to something that already is the craziest thing you could get into and hang on to. It's like hanging onto a thoroughbred horse with two hands. And by leveraging yourself, you're basically going from two hands to one, from two hands to one finger. And, how long can you hang on to something that is wild with one finger? We want to be able to hang on to this with two hands, and that's what we do. But let's take a look at the charts of each here. So this is Bitcoin. And what I did was I took us back a little more than a year, right? Because I want to show the lows that happened in 2024 prior to the election. So we had a low of 50,000 that took us up to, I want to say, about 109. And that was through Inauguration Day, or excuse me, that was through Election Day. This is the election right here. How fast this thing climbed just after the election. Then it sat in, it double topped, and that second top was on Inauguration Day. From there, we had a 36% pullback to Liberation Day, which is when the tariffs came in. And since then, we've gone from about 75,000 Bitcoin to 124,723, and that's a closing price. All right, we all know we went to 126,000, but that's the closing price. And since then, we've come back down and came dangerously close to the 38% area pullback. Now, because that happened so fast, odds are that, and again, you look at what's happened here since then. Bitcoin was up 5% today off that low. So again, is this a bull trap, or was yesterday a bear trap? And time's really going to tell. But if you take a look at pullbacks, and I'm talking about pullbacks with something like Bitcoin and Ethereum, you sometimes have to go and look at what's going on in between the lines. I got 81K to 90K roughly, that's a 50% to 61% retracement. But, for an aggressive trader, why not when we hit the 98,000 or just below 98,000 yesterday, and then set another limit, and then set a third limit. And instead of taking what you're going to invest in Bitcoin or gold for that matter in one chunk, you stretch it out. All right. Here's Ethereum. This is a 225-day chart of Ethereum. Why 225? why are we only going back to 2025 and why are we not going back to 2024? Because this was the low in the last year, and that was 1,500. Ethereum had to move higher and actually derailed from Bitcoin for some time, but then it came right back down and it found its low earlier this year, right? It found its low around April 8th with the stock market. And then it started on the run up and it ran up to 4,380. From 1,500 to 4,380, nearly tripled in value. Since then, we have come back and we've not only gone through the 38% retracement level, but we screamed right down below the 50% retracement level. And 3,200, that 3,151, 3,200 is the round number. That's the buy zone. The buy zone for Ethereum is happening right now, or it happened. So where are we at with Ethereum today? And so I'm going to just quickly bring it up on my phone so I can do an audible for you here. But Ethereum today is at 3,400 and change, all right? It's high for today, and this is an exact high, but around 3,475. So it came down, and it hit this 3,181 and below that yesterday. It's already come back, and it's getting dangerously close to getting above the 38% retracement level. So it has already hit one of our buy zones. Now, best platforms for those of you that are digital investors. Coinbase is clocking in at number 1. These are the top 3. Kraken is number 2. Gemini is number 3. And so, Coinbase, I think, is a great one for beginners. They do have a little bit higher trading fees. They're about 0.5% to 0.6%. They have about 250 plus Bitcoin, Ethereum, altcoins. I'm only looking at right now for altcoins about 12. That's how many altcoins that I look at. And we're probably invested in about 6 of those right now. So, and I could kind of go on. There's some of them have better apps. Some of them have like Kraken has really strong security. You've got that. Coinbase is really probably the number one here in the U.S. But you do have Kraken, you do have Gemini, and then I'm going to give a shout out to Robinhood, because even though it's not in the top 3, and I don't believe it's here simply because it's not just a crypto exchange. It's also an exchange where you can buy and sell stocks. They have IRAs, they trade options. And so the platforms I'm showing you here for crypto are just crypto only platforms. All right. So my assets outlook: gold, silver, Bitcoin, Ethereum are all still long-term long. And that's because of this chart right here. This is a chart of the M2 money supply. This is the amount of money that's out there that's floating around between credit, debit, checking, savings. There's IRAs and anything that's under 100,000. This has expanded quite a bit. All right, so M2 money supply is still on the rise, and because of that, it's really interesting how you look at assets. Assets like, for instance, Bitcoin, Ethereum, assets like gold, silver, commodities themselves, not just precious metals, but hard digital assets have a lag on this. But when money supply turns up, they soon follow. Okay. And money supply during the rest of November is on the turn higher. It's already on the projected turn higher. So we see that lag that can happen. And what I'm telling you is that for the longer term, what's the longer term? I think anything greater than 3 months is long term when it comes to something like Bitcoin and Ethereum. But even gold and silver, with the kind of moves they're having. So, I'm saying that you look at the money supply, just because the money supply is turned up now, it's giving us time to get in. I think we're going to see holidays. I think the holiday season is going to be fantastic for not just stocks, because stocks are in a seasonal holiday bull, but you've got these assets that are now the caboose. So the stock market is the engine, and I think that's gonna help pull along and really kind of slingshot engage things like gold, silver, Bitcoin, and Ethereum. And so That's my overall asset outlook. Now let's take a look at some Fibonacci long-term dip buys. So I've done Fibonacci's on all four of these. I've actually shown you two of them. All right, and I'm going to show you the other two here in a moment. But if you take a look at gold, the long-term physical below 37.50 an ounce represents a Fibonacci buy. For silver, if it goes below $40 an ounce, that's now a Fibonacci buy as well. And I'm talking about the longer term. Bitcoin, 95,000. Didn't hit that, but it did hit just below 98. So it's gotten close. And I'm just saying that we see that last bastion of shorts get pulled out if they didn't already get pulled out. But there's a lower probability that we hit 95,000 here before the holiday season. And Ethereum that hit already, that 3,200, but that could be a resting order as well for ETH. Okay, so let's talk about speed gold. What is speed gold? Well, speed gold, first of all, what does it involve? It does not involve the physical. It does not involve the physical gold. It does not involve physical silver or platinum or copper but it doesn't involve physical gold at all. What speed gold involves is taking the ETF equivalent. Here's GLD. Here's an ETF equivalent for GLD. So GLD during that same time frame, and I was showing you when we were looking at at pressure points, we saw the in the last year we've seen GLD at a low below 240. We saw a high just a couple weeks ago at this is a closing high, 403.15. Where were we just recently? Down in the low 360s. This quadrant here is still a bullish quadrant. And when we get below the 38% level, that's below 340, then we get into a little bit of an area where it's cautionary. We get below 300 on GLD. Based on these 2 points, point A, the low in the chart, point B, the high in the chart, we get below 300, and now all of a sudden, maybe we have changed direction. But I think what's happened here is that, when we were coming up and hitting this 403 level, I was seeing, and some of you were too, we're seeing lines in different countries where people were standing in line to buy bullion, and the lines were long. And that right there told me, okay, we should have a blow off top. And we did. And I've actually been selling GLD up this steep curve. Now we've come back down. We get down to around, if we were to get down to 340, I would be back buying again, looking at those longer terms. But we are talking about speed gold. We're talking about how do we get a year's worth of moving gold, in 1 month, 2 months time. And that's what we're going to discuss tonight. But the first thing to know is that we use the ETF instead of the physical. Why? Well, because the ETF we can trade through the stock market. We can go through an exchange. There's another reason too, right? Speed gold example. So we do use ETF equivalents like gold and silver as they are also optionable, which means we use options. We apply a high probability pattern that recurs, and there's 3 different patterns I look at. I look at price patterns, look at time patterns, look at volatility patterns. Okay. So price patterns are trending price patterns, right? Something we use, we call it currency waves. Time patterns, and we can use currency commodity waves. Time patterns are seasonal. Volatility patterns are based on options. So here's a speed gold example I want to talk about. But when we put the alternatives together like options, we can turn a small movement into a triple digit gain. Let me show you an example. Here's an example back in March on GLD. Right? I wanted to grab the most recent GLD trade, and we get a couple of them a year. But back in spring was the last time that we saw a trade that had a 90% historical win rate. Right. Last time it lost money was back in 2015. 2015 was a bad year for gold and gold stocks, but it wasn't that bad when you consider what happened every other time frame, every other March to April. And so we saw this this pattern occurring and reoccurring, and the last couple of years it's been incredible. But when you put everything together and you look at just the average, you take the winners and losers combined, just take the conservative average, you're looking at about a 4% return. Not that much. Okay. But what we do is when we look at these patterns, we vet them, then we trade them on double or triple money pattern as fast as possible. And that's where we go in and look at options. And we're looking at well, where is our projected price? 4%. Where is our projected time? April 4th. So something we have, and I'm not saying it's a guarantee that it's always going to work, because it isn't, right? But I like patterns that repeat themselves over and over again, because for the longest time, they have worked more often than not. And by using options, we're able to take that small 4% gain and leverage it. So here was the trade that we did, and it was a published trade too. So here's 3-4, buying the GLD, and what we ended up doing was we took a call spread on this. We bought the 270, 280 call with an April 4th expiration. April 4th was the same. That was the pattern. That was the end of the pattern. So we took that, and you can see that on March 18th, we already taken half of that off, right? And then the 22nd or 27th, excuse me, we took the other half off. So these were filled for, you can see $3.10 was the fill price on this. We ended up getting out of half of it for $6.95. So you know what that did? That put our money back in our pocket. We took the other half off for $9. So overall, this is 157% return on capital. 157% is triple digits. Okay, single digits $1, double digits $10, triple digits $100 or more, or percent. Excuse me, percent. So, had a lot of folks that followed us in these GLD trades. Here's some of them that did. I'm not going to read through them. I'll let you read through them. But the plan is, what did all three of these, what did Richard, what did Wade, what did David all have in common? They followed the rules-based trade. They planned the rules-based trade. They executed the rules-based trade. They managed the rules-based trade. And they exited the rules-based trade based on rules that we put together. All right. So, again, what's speed gold? It's not holding and buying stocks, coins, bars, bullion. It's involving rules-based patterns and adding options for leverage. Works on silver as well. And I want to give you a trade on silver that is based on our I call them FIBO levels, or Fibonacci levels. So here's a silver pressure point piece on silver. But we looked at silver in this is a longer term. We looked at it in intermediate term, and it was hitting some really nice levels. Was it about a week ago? It's come back down to those levels. So it's making a really nice trading opportunity. So I wanted to share that with those of you that are here with us on this live session. So let me go ahead and put up the trade based on what's going on with silver. And silver is, it's done the same thing. It exhausted itself, went up to like $50 for SLV, above 50, then it came crashing right back down into the low 40s. Currently trading back down around 42, very close to where it was just a week ago. And so this is fantastic because it sets up for the holiday run, the next holiday run. So I'm putting out here the 42-47 call spread, meaning the 42 calls with a December 19th expiration date are mid-priced around $2.18, right? The 47 calls are priced out here around 64 cents. So you would be buying the lower and selling the higher. And I urge you to take a look at this yourself and see if this fits your risk reward. But you're talking about right now about $155. It's $1.54. Call it $1.55. $1.55 risk and about $3.45 reward. That's about a 220% max reward over max risk. So you can see it right here. You can see all the the reward to the risk here. About a 2.25% reward to risk ratio. That's a really good reward risk ratio for something that now silver. What we're looking at for a projection on silver is about a 10% move, a little bit more than a 10% move between now and December 19th. This is a great way to do it without paying $42 or $43 per share, without having that risk in the event that our patterns are wrong. And so that puts a really good opportunity out there for this particular trading pattern. All right. So that is the trade we have. So at this point, what I want to do is I want to take a quick look and see if there's any questions I might be missing. I'm going to pop in here and see what we got in the. It looks like Jay is here to take care of everything for me. That's fantastic. Hello, everybody. Welcome. David's from Sydney, Australia. There's a Melbourne, Australia in the house, Colorado. Just so many people that are coming in, tuning in from around the country, around the world. Lee, we are recording this session, and I'll have a recording out for you maybe later tonight. Yeah, I'll have it out for you later tonight. So we'll get that out to you there. So at this point, let me kind of continue on a little bit here because I have so much more I want to share with you guys tonight. But let's start with really the problem. This is the with these, this is great. So we've discussed so far long term, and then we got into speed gold. We get into short term, and then this is just one way, one way we use seasonality. We use Fibonacci for trades that are better than 30 days. We use seasonality from around 30 to 60 days. But we got a couple other ways that we take advantage of these things that come up. But I just showed you two trades. And how often do I get a trade in GLD? Maybe twice a year. How often do I get a trade in SLV? Maybe twice a year. That's 4 trades. All right, what about the other 48 weeks in the year? If I want to take a trade every week, or maybe take a trade every month instead. Let's say month. Let's get real conservative. What about the other 8 months of the year? So the problem that I've identified is that there just simply isn't enough gold and silver ETFs. There's 2 ETFs. There's a lot of options. But if you're bullish gold or if you're bullish SLV, well, you could go buy calls. You could buy call spreads. You could buy call spread butterflies. You could buy call calendars. I mean, but still at the same day, if everything's all the same, then we're talking about one direction, okay? ETFs like GDX and Nugget, they also track like the physical, but all combined, if I looked at GLD, SUV, GDX, GDXJ, Nugget, maybe some silver stuff, platinum, less than a dozen work for me. So here is the solution. And Jeff, you're already knocking on the door there. The solution is you increase the list. And then, miners, that's one way of increasing the list. I've got an even better way to increase the list. So the way I want to do is I want to do all metals and all mining stocks. I want to increase the list with rare earth minerals and ETFs. All right. I did a video a couple of weeks ago on rare earth. And in that was about 15 or so, I think, rare earth stocks. And from that, I chewed it down to 5. It chewed it to 10, then to 5. There's 8 of them I like in there. But anyway, I've 8 rare earth mineral stocks. I add that to the list. I add all the metals and mining to the list. I add gold, silver, and platinum ETFs to the list. You know what else I add to the list? Cryptos. Because cryptos are a digital asset. All of a sudden, where we started with 2, maybe 4, now I'm working with 65 to 70 stocks, ETFs. When I add cryptos, when I add the dozen or so cryptocurrencies that we look at too, as far as physicals, all right, because we can do those through exchanges, we're now sitting somewhere close to 80 different securities, 80 different tokens or securities that we can trade, and 65 to 70 of them we can trade options on. All of a sudden now I've got a pool of very big million share and more per day stocks that have options that have liquidity to very good liquidity. And that's what putting all of this together does. So I want to show you, forget cryptos for a moment, forget rare earth for a moment. I want to show you what we did with just the metal stocks, the mining stocks, the gold, silver, platinum ETFs. Okay. Here is a published track record. You know, when you think about, okay, buy gold, buy silver, but how do you drive up the winning percentages? Okay. By the way, there's only one loser on here. Yes, it's that first one up there in red. By using option strategies based on volatility. So what we do is we have a three-pronged approach to this. If it's average volatility, you buy the asset. That's the long term. That's the Bitcoin. That's the GLD or SLV. If you have low volatility and you have a buy signal, whether it's a price signal, a time signal, or a volatility signal, if the volatility is low, you would look at buying time premium, buying options, buying calls, buying out of the money call spreads. If it's high volatility, you look at selling options. Maybe you sell out of the money puts. Maybe you sell credit spreads. Okay. This is our real-time results with just metal stocks and ETFs. 27 trades, 26 winners, one loser, $12,459 in profits. That's based on no more than, it was based on $2,000, all right, per unit risk. And that's the most. Most of these are much, much less. So that's how you drive up the winning percentage. You take a mix of what is your rules-based strategy. And then you don't just, if my rules-based strategy is seasonal, or my rules-based strategy is, maybe it's a quantum strategy we have. We have quantum bull, quantum bear strategies, or maybe it's a volatility-based strategy. You don't just go out and buy calls for every single one of them. You let the options tell you what to do. That's how we achieved those kind of numbers you see there to the right with just metal stocks and ETFs, right? Cryptocurrency. Cryptocurrency has been having an interesting year. I mean, you look at what happened after the big slide, and we're talking about Bitcoin being literally at the same price yesterday that it was at the beginning of the year. It made its big move up to 126, but it came right back down. So when you look at the average crypto fund outside of Bitcoin, it's losing money. Tom Lee started the fund with Ethereum. I venture to say, once it got going, right now, I think it's down for the year. I don't know the numbers because I don't know where he first got into Ethereum, but I'm pretty sure it's over what the price is now. And then there is altcoins, and anybody that's been investing in altcoins. We have a couple of altcoins. I have right now on the half a dozen or so that we have been in for the year. I think we're 4 and 2 right now, and we're out of half of 5 of those 6 coins. We're already at a half because they hit our projections. But the rest of the positions we have open, we're up on 4 and we're down on 2. One of them we're not down on much at all. And so those are the coins. But with the rest of crypto, crypto options, these are options on ETFs and crypto stocks. We're running a 76% win rate this year in an absolutely insane environment because we started at the beginning of the year when crypto was already over 100,000. So, or Bitcoin. So Bitcoin's kind of gone up, gone down, gone up, gone down. And here we are kind of popping back up again today. But that's our closed positions. So how do we drive up the winning percentage? Well, by adding crypto to something that already works and by trading those particular ways, that's how we achieve that winning rate that for this year, 76% in crypto. And with gold, silver, mining stocks, metal stocks, we're running a high 90% win rate. So I've been putting together a report on gold, and I'm putting together a report on how we trade gold, opportunities we spot in gold, and then how we use options on gold and gold ETFs, especially GLD. And so my gift to you is a 17-page report on gold, why the breakout isn't over yet, and the best way to leverage the next move with options. And in it, I don't discuss every option strategy under the sun. You know, we'll talk about calls, we talk about call spreads, but I'm not a big fan of doing multi-leg, six-legged positions when you're bullish on something. So this report basically shows you, it will show you how we spot opportunity. It will show you how we create alternative risk strategies. And this is being sent to you. A link to this will be sent to you with the recording. So check your inboxes and you'll see it in the recording or in the details that went along with this recording. All right. Now, my offer to a few of you that are interested in learning more. And what I mean by learning more is shadowing me for the next 60 days. That means what I want to offer you is a detailed crash course on my rules, all right? All of my rules-based trading systems that I use for cryptos and commodities. All of my scans that I use for cryptos and commodities. My trades over the next 60 days and more. So introducing, for the first time ever, my cryptos and commodities crash course. All right, it starts on November 10th, and you can join now. I'll show you how to do that in just a moment. But if you're catching this recording, you can check back to the details that came with this video, and you will see links on how to join. You're going to want to join because it is a very special package for a very special price. And again, we start this on Monday. So what am I doing? And of course, what are we doing this for? So first of all, this is a 60-day shadowing me event. Starts with 4 consecutive days. So we're going to start it off next week where I'm going to do 4 consecutive days, Monday, Tuesday, Wednesday, and Thursday. On Monday, I'm going to be talking about the foundations of hard and digital assets. I want to show you and give you my CNC power stock list. CNC is cryptos and commodities, all right? We're also going to be doing, I call the all-in-one charts and Fibonacci charts on many of these. And we are going to look for live setups using Fibonacci and the money calendar, right? The money calendar is my seasonal strategy for stocks, ETFs, and yes, commodities and crypto. On Tuesday, we're going to do a review, and I'm going to be also showing you what quantum scans are. We're going to talk about the rules-based trading behind quantum scans. There are bullish and bearish quantum scans, and so you're going to get access to those. You'll know what they are. You'll know how to use them. You'll get the scans, and we're also going to do live setups based on quantum scans. That'll be on Tuesday. Wednesday, I'm going to do another review. So each day we come in, we do a review of the prior day. And on Wednesday, I'm going to do a review of Tuesday, but I'm also going to talk about my 90% cryptos and commodities strategy. It's a 2-part strategy, and it's going to be for both larger accounts and smaller accounts can do this too with live setups. So each day, I'm hoping to get some sort of a live trade out of this that we can follow along with. On Thursday, I do a complete review of the week. We're going to do a complete software review of the week. We're going to go into the scans themselves. I'm going to show you how you can change those scans around and really kind of tweak them for yourself. We're going to talk about live setups again. We're going to look for live setups in all of the scans. I want to talk about portfolio management. I want to talk about much, much more. So that's just the first 4 days of this 60-day program. This also comes with 60 days of cryptos and commodities scans. So right from my software, I have something we've just created, a brand new crypto and commodity scanner, which will have all the scans that we're going to be using in the first 4 days, and you'll be able to use these scans over the next 60. That includes my sell put scan, my put credit spread scan, money calendar, and I'm going to show you how we utilize the money calendar for cryptos and commodities, quantum bull, quantum bear, and my crypto tools. Now, the big difference between the buttons that you see here and what I've used in the past is that these are going to be set up for cryptos and commodities. So they're going to be especially set up where you're just punching and going with cryptos and commodities. And so you get 60 days of that. That's called my Complete Trader software scans. And so you'll have all of that ready to go. It's a full options analytics program as well. It's not just these scans. We'll show you how to create the option trades in there as well. All right. Live trading room. So I'm going to extend this to the cryptos and commodities members. This is weekly live webinars that I do. I have a select group of people that I do these for. I'm going to include you in that for the next 60 days. We do market analysis. We do options analysis. We do live trade setups. This is at Mondays at noon. It is a small group, a group that I hope you will soon be part of. It is part of the program. Also, I'm not stopping there. For the next 60 days, you get my new upgraded research service, Cryptos and Commodities. This is going to be my best crypto and commodity alerts to you each week. I picked the best one of the week, and we send that out with entries. We send it out. We also do adjustments on these and exits. I'll do weekly update videos for this particular research service, and I will show you open positions, any past positions that we got out of, and we highlight the present position as well. We have video modules on this and much, much more. So this is my brand new upgraded research service, Cryptos and Commodities. Hasn't even started yet. You're going to be the first to get it. All right. So this all comes with a members only website where the community can get together on this site, and I will have all of our recordings. I'll have all of our alerts, and I'll have all of my communication to you go through this particular cryptos and commodities website. All right. You know, they just keep coming. Frank says, just started with me, made $12,037. Thank you. William said, biggest hurdle working full time is I'm so grateful Tom is here. Please don't ever leave. I have no intention of leaving. All right. And, you know, like I said, just, you know, a lot of folks very excited about what we're doing in the gold space, in the precious metal space, in the metals and mining space, and now putting this all together, hard assets and digital assets. We're very excited about being able to put something like this together. All together, folks, you get my Cryptos and Commodities course. It comes with 4-day live workshop. The recordings you get for 60 days. 60 days of my Cryptos and Commodities scanners, 60 days of the live trade sessions, 60 days of the Cryptos and Commodities alert service, access to the members only website. Now, if you were to piece all of these together, and this is what they end up costing. This is not a fluffed up price to bring it down. This is what this service costs. These services each cost on their own together over almost $2,200. All right, $2,189. We're doing this for more than 75% off. I think it's 78% off, $495. Join now. All you got to do is click on, you could take your phone, you could scan that QR code. Okay. I have a link below that you could click on as well. If you're watching the recording, then go back to the email the recording came in, and you will have links to join. This is for a very limited time and to a very limited number of people. All right. Some of the frequently asked questions that we get, you know, and we've gotten them in the past on when we do these things from time to time. This is the only one that I'm doing for 2025 in this particular space. So do we have to be there live each day? No, less than half of our attendees are with us live. Most of them end up watching the recordings later in the day, or the next morning, etc. And because it isn't day trading, because it's not something that's short term, you're not going to miss anything. You won't be left behind. All right. Most of the trades that we do, most of the setups, and what I'm going to be sharing with you is in the 30 to 60 day realm. All right. What if I'm new to option trading? Good question. This complete package teaches you everything from the basics to advanced techniques, right? But, the techniques aren't that advanced. The rules-based strategies are something that nobody else is seeing. And so what we've been able to do is take rules-based strategies in price, time, and volatility up to 90% or better in terms of probability of profit, and put them together based on options into a package that anybody can learn. All right, next, how much time does this require? Well, the first 4 days, you got to put a little bit of time into the first 4 days I'm doing with you. But other than that, and I do the live events, I do the education really to get, so you can get a handle on exactly what I do. But once you start to understand this, and once you start to apply it on a regular basis, it's 15 minutes a week. Most of the scans, most of the online research, it's there for you. Takes a few clicks. That's all you need. Finally, I've seen your premium services. Why are you doing this one for so cheap? Okay, so we got a lot of folks out there that follow me on Patterns and Profits, follow me on YouTube, follow me on Stock Cycles Trader. And they have wanted to join a premium service. They just, for one reason or another, weren't ready. I'm giving you the chance to join something, and not just a research publication or not just software, but the whole package put together where you can try it out. You can get the education. You can get my weekly alert service, and you can get the daily picks from the scanners. All right. I want to give you a chance to fully immerse yourself into this all-in-one course. So there it is, folks. That's the offer that I have for a few of you. If you're interested in being one of a few to join me on this cryptos and commodities crash course, join now. Again, you can hit the QR button here right on the screen. I also have a link you can join. Just check out the email. If you're watching the recording, check out the email, and you'll see all the details right there of everything you will get. Once you do click on the link, you're going to get taken to a page that looks like this. This is the Cryptos and Commodities Crash Course. It's going to show you everything that I just talked about, all right? The live sessions, the access to cryptos and commodities. You're also going to get proprietary scans. You're also going to get my live trading room and much more. $4.95. Just click on the button and follow the details. All right. So that's it for me for tonight. I want to thank you all for joining me. I hope you learned something. There's my outline there for gold, for silver, for Bitcoin, for Ethereum. I've got it all wrapped up in a really nice 17-page report for you as well. But if you want to take a step farther, I've got something here for you too. Thanks for joining me. Have a great rest of your evening, and I'll see you soon. Bye now.